This is Alpha. Let's continue our conversation from last time. The unknown field of stock technical analysis. Top trading strategies must withstand rigorous backtesting. Let's first review the principles of the Chord Trading Strategy. If the turnover rate of a stock for 3 consecutive days R1, R2, R3 meets the big triad condition, we will buy it. When the ratio of the turnover rate of the latest day to the turnover rate of the previous day meets the holding condition of the major triad, hold it, otherwise sell it. The buy and hold conditions are fairly simple. As the saying goes, the simplest way is the best way. Just like when dealing with high-end ingredients, often only the simplest cooking methods are needed. As the saying goes, it's easy to talk about it, but it's hard to implement it. Whether a trading strategy works or not depends on the backtesting effect. Top trading strategies must withstand rigorous backtesting. Next, we will backtest this strategy using historical data. We divide the test into 4 steps from macro to micro. The first step is to test the general applicability of the strategy by randomly selecting a large number of stocks as the target pool of the strategy. Compare the test results with a control group. Step 2. Practical feasibility test. Considering the convenience of ordinary traders, reduce the number of stocks in the target pool, and give priority to the stocks of representative large companies in the S&P index for backtesting. The reason is that liquidity is good and the behavior characteristics of large companies are relatively stable, which avoids accidental profits in the strategy. The third step is to test the industry differences, and we still select companies that are representative of some industries in the S&P index. Backtest each stock separately to see how the strategy differs across industries. The fourth step is micro-analysis of transactions. Analyze the details of buying and selling operations of individual stocks. Understand where in the candlestick trend the trading strategy will be activated. Summarize strategy characteristics and understand the advantages and disadvantages of strategy trading. Based on the above principles, we first conduct the first step, testing the universal applicability. We use the top 200 stocks in the S&P index as the target pool for our strategy. In order to understand the performance of the strategy in bear and bull markets, we set the test period to 3 years. From September 2021 to September 2024, the testing principles are consistent with the methods in the previous program. The principle of fund allocation is equal weight allocation, and the control group still holds the S&P C5e ETF. We see that the net value curve of the backtest results is as follows. From the chart, we can see that the profit of the Chord Trading Strategy is significantly higher than the profit of holding SPY all the time. The downside is that the retracement of the strategy transaction is a little bit larger. The test results of these 200 stocks tell us that this strategy is not to shoot the arrow first and then draw the target. This strategy has universal applicability. Next, we will conduct the second step of practical feasibility testing. In order to avoid the problem of funds being unable to be allocated due to buy signals appearing on many stocks at the same time, we appropriately reduce the target pool. Only the top 20 stocks in the S&P index are selected as the target pool for the strategy, and other testing principles remain unchanged. We can see that this net asset value curve is very stable and significantly exceeds the return of holding SPY. The maximum drawdown is smaller, and the Sharpe ratio is close to 2, which can be said to be quite perfect. From this picture, what I see is not how high my level is, but I lament the omnipresence of cosmic order. Let people surrender to the magic of nature. An unexpected planting leads to a good harvest. Integrate art into life and inspire trading with music. Isn't this what a trader who loves life wants to achieve? Next is the third step of the test, industry difference test. Testing the Chord Trading Strategy at a smaller granularity. We selected some representative companies from various industries for testing. Understand the differences and limitations of strategies across industries. Let's do a test with Apple stock first. The test is consistent with the previous principle. We can see that the net value curve shows that the maximum drawdown is only 5%, the winning rate is as high as 77%, and the profit and loss ratio is close to 3. It can be said to be quite excellent. The strategy has performed well in technology stocks. Next, let's take a look at how the strategy performs on stocks in the automotive, pharmaceutical, and consumer sectors. We see that Tesla tested similarly to Apple, but ended up with a higher net value of over 1.6. The performance is quite good. The next picture shows the test results for the stock of pharmaceutical giant Eli Lilly. The performance is also very good, and the returns are not inferior to Apple. This chart shows the test yield of the strategy on Costco, a representative of the consumer sector, which is the lowest among these stocks. This is completely understandable, as Costco is a solid company. The stock price fluctuates little, which is not an ideal target for strategic trading, but the return rate of the test is still more than 15%. And the maximum retracement is very low, only 4%, and the whole trend is very stable. The strategy also performed well in the consumer sector. Step 4. Microanalysis of transactions. Given the high returns on Tesla stock, let's take a look at the details of the transaction and the characteristics of the strategy. This chart shows the trading record of the strategy bought on October 14, 2022 and sold one day later. We see that the buy point is located on a small rebound band in a large band downtrend. The timing of buying is just right. Almost at the lowest point of this small rebound, I sold it the next day, perfectly avoiding the decline. The gross return on this transaction is 4.6%. The second chart has similar trading characteristics to the first chart. It also successfully caught a small rebound in the downward trend. Buy at the lowest point, hold for 2 days and sell, the profit is as high as 10.3%. The transaction characteristics of this third chart are different from the previous two. The purchase price is still at the lowest point of this period, but in hindsight, this point is the reversal point of the big trend. Tesla stock has a big bull run after April 2024. It soared from more than $140 per share to a peak of more than $400 per share at the end of 2024. However, the Chord Trading Strategy is a short-term strategy. Although I successfully bought at the lowest point, I missed out on a 200% return in the following 6 months. Every inch has its own strengths and every foot has its own weaknesses. There is no perfect strategy in the world. In this transaction, the return on holding for 1 day is 12.1%. What more could you ask for? In addition to Tesla, the trading details of other stocks are similar. For example, the trading details of Apple and Eli Lilly stocks. As shown in the picture, it is a quick in and quick out method. In addition to showing the profit records, don't you look at the loss records? Of course you have to watch it. No matter how good your strategy is, you can't be blinded by success. Strict backtesting discipline does not allow for covering one's ears and stealing the bell. This strategic trade in Eli Lilly stock is a loss-making one. If you find something wrong after buying, sell it the next day. Suffered a loss of 1.3%. We found that due to this decisive stop loss, a larger decline was avoided. Therefore, short-term strategies may miss big gains, but they can also avoid big falls. There are profits and losses in strategy trading, but the cautious style of this strategy is consistent. From the above transaction details we can see Chord Trading Strategy is a short-term trading strategy. Next, we use the common trading strategy evaluation criteria to evaluate this strategy. First, the rate of return is extremely high, judging from the backtest results of the top 20 stocks in the S&P index. The return on this 3-year strategy is 250%. Far exceeds the S&P SPY ETF's return of less than 50% during this period. Second, high winning rate, judging from the backtest results of the top 20 stocks in the S&P index. The winning rate is around 60%. For some stocks, the winning rate can exceed 70%. The reason is that we found that the buying time is quite accurate. The purchase price is basically at the lowest point during this period. This greatly reduces the possibility of suffering losses. Not only that, the holding conditions are also quite strict. If you are not sure, withdraw. Don't be greedy. Only make visible money. This careful intervention, cautious holding, Approach avoids a lot of risks. Third, the profit and loss ratio is excellent. Overall, the profit-loss ratio is around 2. The profit-loss ratio of some stocks can exceed 3.5. This means that the probability of making $3.50 in a trade is the same as the probability of losing $1. Fourth, the maximum retracement is small. Since this strategy is a short-term strategy, the time interval between buying and selling is very short, often only 1 or 2 days. This will likely result in missing out on the subsequent upswing, but will also allow you to avoid a possible downswing. The maximum drawdown is well controlled. This is also good. If there are 3,000 rivers, just scoop one ladle. Quit when you are ahead, don't be greedy. In addition, the strategy also has a strong false signal filtering function. Never give up if you are not sure. Although the number of operations is small, once you make a move, you will most likely succeed. Hard work pays off. After a strict retracement, we can safely let the Chord Trading Strategy play a role in actual combat. That's all for the Chord Trading Strategy. Of course, this strategy is just a screwdriver in the strategic tool arsenal. In future programs, I will share my Chord trading strategies with you without reservation. For me, knowing how to live is more important than making money. What is more valuable than trading strategies is understanding the underlying logic of how the world works. Because everything must follow the basic laws of this universe. Therefore, there must be an inseparable connection between them, which is the gift from nature to those who care. Perhaps the so-called harmony between man and nature is this state. The above is the entire process of a top trading strategy from birth to practice. Okay, that's all for now. We will continue next time.